Today on the interview with me, Aisha Faridi, I'm joined by one of the world's most respected economic thinkers, a former RBI governor, former IMF chief economist, and a voice that governments listen to, whether they agree with him or not. Raghuram Rajan has warned about global financial risks before the world saw them coming, and he continues to challenge comfortable assumptions on growth, inflation, and power. As the global economy resets and India charts its next phase, I speak to Raghuram Rajan on what lies ahead for the world and for India. Dr. Rajan, great to have you with us today on ET Now.
Thanks for
Thank you
having
so
me.
much for your time. Right. Dr. Rajan, given the shrinking fiscal space you've spoken about, how do you think the US Federal Reserve will balance inflation targets with political pressure for rate cuts as we step into the new year?
I think the Fed is increasingly dovish. Whether this is because of political pressure or because it sees that labor markets are particularly weak, perhaps more weak than is the public perception, it's hard to tell. With inflation having been above its target for now close to 5 years, you would think that there would be more of a desire to get inflation under control. Now, to be positive to the Fed, it still has reassured markets that it will get there. And if you look at market indicators like the five-year forward expectation of inflation, it is fairly benign. So at this point, it still has credibility. But how long can you be below your inflation target, be above your inflation target, and not get it down? Is unclear. I mean, again and again, it seems to think that this will be a natural process. It doesn't have to keep interest rates overly tight to get there. It's again at it with the cuts which are meant to keep the economy going. Now, if you look at estimates of growth for next year, it's above potential, at or above potential. So it's not as if the Fed is particularly restrictive. What seems to be its focus is more on the sort of K-shaped nature of the U.S. recovery, that there are people who are hurting, especially in the lower middle class. The affordability crisis is an important issue, and so it's trying to keep their jobs. Though, of course, another answer would be to try bringing down inflation, which hurts the people at the bottom much more. But it's chosen one over the other of its mandates. In the meantime, the U.S. economy is chugging along really strongly with enormous investment in AI-related stuff. And with the upper middle class really buoyant on the backs of enormous stock gains and housing prices remaining stable rather than coming down because of high interest rates and low volumes. So all in all, it looks like things will start picking up again in the U.S. as we go into next year, barring something unforeseen on the political front, which of course can never be discounted.